As we wrap up 2024, as a medical professional, you may be wondering, what am I going to do about my taxes this year? Should I file them myself? Should I use TurboTax? Should I pay for a CPA? What's actually going to help me, bring me value, be necessary and useful? And what's going to be money that I could just avoid spending? We're going to walk through what type of medical professional should be using a CPA to file their taxes and who would benefit from strategic tax planning, a totally different service than tax preparation. Let's walk through first categories of people who really need a CPA to file their tax return. Now, personally, I'm of the opinion that unless you have a lot of knowledge about money and the tax code in general, you probably should be using a CPA to file your tax return and not attempting to do this on your own. That being said, there are several groups of people who really benefit from having a good CPA in their pocket to review their tax return and help them with preparation. One of these is if you're married and pursuing public service loan forgiveness. One of the assumptions when you do your taxes is your tax filing status. And for many married folks, that's automatically married filing jointly because you typically get slightly higher deductions that way. That being said, for those pursuing PSLF, if you have a two income earning household, one person carries all of the federal student loan debt or a lot of it. Your tax filing status massively determines the cost of your student loan payback and is something you need to have a good, lengthy discussion with your CPA about, meaning you should have a CPA to discuss it with. In this example, this is a couple where one person has no federal loans, the other person has 98,000 with an average interest rate about 5.75. Both are relatively high earners, and you can see that, for example, on the SAVE plan, changing tax filing status from married filing jointly to married filing separately saves them tens of thousands of dollars. Now, of course, you might lose some deductions. It makes using IRAs very difficult, but especially with higher student loan balances, this is a very important conversation to have with your CPA. So, finding someone with experience in PSLF clients in particular is very valuable. Now, this next one, I might get some pushback on because if you're really savvy with money, you maybe could handle this on your own. But if you're doing a backdoor Roth IRA, I think it is helpful to use a CPA. Now, of course, you can do it yourself. And if you know what you're doing, you can file Form 8606 with your taxes to tell them, hey, look, I made this non deductible contribution to my IRA, which is the first step of a backdoor Roth IRA. But particularly if you're someone who is dollar cost averaging out your backdoor Roth IRA contributions and it extends out beyond the calendar year into that January to April 15th window of contributions for the year prior, you're going to end up in a spot where your 8606 for your non-deductible IRA is not going to fall in the same year as a 1099-R that's generated when you make the conversion. And I just think it's easier for you to not mess anything up or get confused if you have a CPA helping you navigate this and making sure that all your forms get filed appropriately. The next category is pretty clear. If you are a medical professional and you're a 1099, it's very common for folks in that situation, if the majority of your income is 1099 income, to run that through an S Corp. Now, you likely have a CPA anyways, I would hope, because there are payroll requirements when you have income coming in through an S Corp that you need to follow, and most folks have a CPA help them with this. But in particular, if you're someone who has most of your income coming in through 1099 sources and you're, again, using an S Corp to minimize your taxation, you should have a good CPA in your pocket to help you with tax planning and also to make sure that everything is in order with your payroll filings and your tax return in general. The next category I feel pretty passionately about, and that's real estate investors. Now, there are two big ways you can use real estate to offset your active income in medicine. One is the short-term rental tax loophole, which we often think of Airbnb for that. And the other one is if one partner in a marital partnership claims real estate professional status. Now, both of those things are highly audited, very particular categories of tax strategy, and you need a CPA who's very, very, very familiar with them in order to execute them in a way that is going to maximize your chance of not getting audited. So, again, you need an excellent CPA for this. You don't even just need a CPA, you need a CPA who's very familiar with real estate investing. Even if you are not using one of these tax strategies, you should be taking full advantage of depreciation and paper losses and carrying passive losses forward. And having a CPA who understands real estate investing will be invaluable. If you have taken the time to invest your hard earned money into real estate to take advantage of depreciation and appreciation and cash flow and all of those things, you also need to find a CPA that can help you make sure that everything is maximized on the back end. The last category I'll cover is people that have a side business or are a business owner. If you're a practice owner, or if you have a side hustle that generates you a decent amount of money. Decent amount of money, of course, varies. If you make 4,000 bucks a year selling stuff on Etsy, it might not be as valuable. But if you're making 25, 30, $40,000 a year with your side hustle, there are a lot of deductions that you should be able to take advantage of. You might not be familiar with all of those, but any CPA will be. And so by you utilizing a CPA, you're ultimately going to maximize your deductions that are available to you with that side hustle income. Or again, with your business ownership, which we all know comes with a whole new world of tax deductions and tax strategy. If you're in the group of people who are either real estate investors, business owners, or you honestly just have a high net worth and you have the ability to make large investments in alternative asset classes, you may be someone who benefits from strategic tax planning. This is a very different service in tax preparation. Tax preparation is exactly what you would think it is, right? Preparing your tax return. Where strategic tax planning is actually sitting down in advance of the year and mapping out what are the big needle moving strategies we're going to utilize this year to substantially lower the tax bill. And so if you are in a position where you're like, oh, we might buy a short term rental, then having a strategic tax planning meeting about positioning yourself to use a short term rental tax loophole, that could work. Or if you're someone who, again, has a high net worth, you have the ability to make relatively large investments. You might sit with a CPA and they might say, hey, look, there's this oil and gas opportunity. The minimum investment is 100K, but we can go ahead and use this to offset active income because of the way it's categorized. And they'll present you some opportunities to really lower your tax bill through investing modalities. If you don't have the ability to make those moves, you have no interest in real estate, you don't have the capacity to create some of those other alternative asset class investments, you don't have the business income, you're a straight W 2 earner, it's probably not worth your money to pay for strategic tax planning because it's unlikely that the value you receive will exceed the cost. If you're in any of those categories we mentioned, though, having a really strong strategic tax planner can be a really important part of your team to make sure that you're very legally minimizing the taxes that you pay, thus maximizing what you keep and maximizing your long-term wealth.